All right. All right. I apologize for that. Of course, we're all a little frazzled right now with everything going on around the world, and we, of course, are adhering to our local government's request to have as few people in the office as possible. I myself have been quarantined in my home for about the last 6 days. I was very glad to get out today. And normally the person that would be running the system over there is either me or another person who's not in the office today. And today I, how shall I say, I Shanghai Jeff, who's generally on this side of the desk, to go ahead and take care of it for me. So we apologize if this audio is not what it normally is. Please go ahead and let us know in chat. We are again right now simulcasting in both GoToWebinar and YouTube. And in either of those places, we will be monitoring chat and we will be answering questions. So let's go ahead and get started with our favorite part of any presentation. Oh, Jeff, I assume we are showing my screen now. And this demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Jeff, do you think there's risk in trading?
No, not at all.
Okay. So I think that's pretty clear. We might have specific examples of specific positions you might want to take in the market, and we're not telling you to take those. That's essentially what we're saying today. And trading certainly does have a risk. Now, let me go back to here. The point of today's presentation really is for the person who has heard a lot about trading, they've heard a lot about the markets, but they have not yet participated in any way, shape, or form in the markets. So if you're here today and you have participated in the markets, this might not be the presentation for you. You're certainly welcome to stick around and glean any basics or review that you want. But anybody who is here, we don't really assume any knowledge at all about markets or stocks or trading or anything. So that's where we are today. Let's go here. And again, I'll just take an opportunity now. Can everyone see and hear this okay? Maybe give Jeff a chat. Yes. Just because we got off to a little rocky start, I want to make sure it's working okay. Okay, so as I considered this presentation today, I actually planned to do this several weeks ago, and in a meeting I had with my boss and several other people in the company, I said, is this still a good thing to talk about, considering the state of the markets and the state of the world right now? And then we decided, well, yeah, it really is, because now is seemingly scary time to be involved in the markets, but it's really an opportune time to be involved in the markets. So if you're thinking about trading, now is not a bad time to jump right in with provisos. So let's talk about some of these questions today. What markets will you trade? Oh, these are the questions I think you should ask yourself before you start trading. What markets will you trade? What time frame will you be trading? Do you have enough money to trade successfully? How do you read a stock chart? How do you find things to trade? How do you know when to enter a trade? How do you know when to exit a trade? That's the tricky one. How to find and test a strategy that works for you, and how can you be confident in your trading decisions? Okay, let's talk about those more or less one by one. All right, now you've probably seen all these things or heard of all these things on the screen right now: options, stocks, commodities, futures, forex. These are all different things you can trade in publicly traded markets right now. They're all different in their own special way, and they all have advantages and disadvantages. Some of them are more complex than others. Some of them involve buying contracts that will give you more leverage, but require you to sell at a specific time or buy at a specific time. There are more time involved. Some of them more or less let you buy when you want to and sell when you want to. The one we're going to, first of all, if you're interested in any of these, go ahead and review and research them. The one we're going to talk about today really is stocks, so we're going to focus on that just to keep things simple. I think even the most novice person listening right now has probably heard of a stock. You're essentially buying stock, a share of a company. You're buying a piece of a company. You're actually buying something, which is not necessarily what you're doing with some of the other options we just showed. And essentially, people buy stocks for different reasons. You might buy a stock to as a speculative trader where you're buying it low and selling it high. You might want to short, what they call shorting, where you're actually, well, we won't even get it, let's get into shorting a little bit later, but you might be buying it just to get the dividends as a long-term investment. And that's kind of where we're going to talk about time frames. So if you look at this very, very oversimplistic chart, you can see it's over a course of 10 years, and let's say that's stock ABC, and you get in at that stock, you buy it at year one for $1, right? And you're in that for the long term, and you get out after 10 years, and this fills in, at $76, and you've profited $75. So that is trading, but that's more of an investment. That's a long-term investment. That's sort of what your 401k, we call in America, or your retirement account is doing. You're saying, I have confidence that the market over the long term is going to be rising, and I'm just going to stay in this and ride it out and sell it out when I'm ready to retire, or whatever point I decide to get out of that position. And when we say position, when you've bought any kind of security or stock while you're in it, we call it in a position. Oh. I have to mention at this point that, again, typically Jeff is on this side of the camera and I'm on that side of the camera, and Jeff is employing all of my favorite tricks to distract him whilst he's giving a presentation. How are we doing over there, Jeff? Are we getting anybody saying our sound or audio is bad?
No. Everybody's saying that the audio is being controlled awesomely.
Oh, really?
Yeah, they say
probably
it's
better
the
than
best
usual.
audio control ever.
Oh, is that what they're saying? Yeah.
No, but what I wanted to do is just have you look in the camera a little bit.
Oh, I appreciate that. I appreciate that, Jeff. Thank you. I'll try to remember that. And I have no idea where I was. Oh, okay. So this is a solid plan, right? Get in low, get out high over a course of a long-term investment. Now, but this isn't really what active speculative traders do. They don't get in, hold it for 10 years, and get out. What they'll do is something a little akin to this. And again, this is super oversimplified. But let's say you do something more like this, where you're getting in at year one and getting out here, getting in here. And when I say getting in, buying, selling here, buying here, selling here, buying here. So it's the same ABC stock over the same time period, but you've gotten in and out of the trade 4, 5, 6 times, and each step along the way you've made this much money, right? And overall, at the end of it, you've made $119 rather than $75. So this is the kind of action, this is the kind of price movement that active traders get excited about. It's not so much that a stock is going up or down to an active trader, it's that it's not going sideways, I guess is a good way to say it. So if it's going sideways, there's not really much happening and no one's really profiting from that. But if it's going up or down and with a lot of action and movement, then you can profit from that. Okay. Another question you might have is how much money do you need to trade successfully? That, of course, is a very personal question. And also the word successfully is a very relative question. Surely a brokerage will take your $50 and you could open a brokerage account. By the way, again, because we're trying to adhere to novices, a brokerage account would be a firm that you can use to trade with. You tell them to buy a share for you at a particular price or a number of shares, and they will do that. And then you can tell them to sell when you're ready to sell, and they'll do that. And you maintain that account. And opening that account, by the way, is not unlike opening any savings account, and you can actually get probably the same interest as any statement savings account would give you just opening that account. So there's no real risk just to open a brokerage account. I guess step number one in how to start trading would just open a brokerage account and be a little familiar with that process. But now, as far as how much money to put in that account, let's say just out of the blue, you have $1,000 and you're going to put that in a brokerage account. And you use that $1,000 to buy 20 shares of ABC at $1. That's $200 you spent. Now that you're in a position, right? And after X amount of time, undisclosed amount of time, that share goes from $1 to, actually I realized I did a typo. It wasn't supposed to be $1 to $11, it was supposed to be $1 to what would make it $2.20? The math's not right here, I beg your pardon. Anyway, let's say your share goes up so that you're making $20. And that's, why did I put $1 to $11? If you made it $20 to $11, that's going to be more than 220, is it? No, that's right. Okay, I did the math right. I'm sorry. I think the bright lights are making me a little crazy. At any rate, the point I'm making is you've taken about a 20% risk of your total brokerage account on one stock, and you made about $20. That's not, and by the way, I didn't even mention how much time this took. That could have been over the course of a year, or I think I meant to say $10 here, by the way, not $1. But anyway, that could have been over the course of a year. It could have been over the course over 5 years. You don't know. The point I'm making is the more you can have in your brokerage account, the more you can leverage every trade, and the better you can do. Now, if you Google right now, how much money do you need to be, to make a trade for a living, I suppose, they'll say anywhere between $750,000 or a quarter to $500,000. That's where, if you start trading successfully and consistently, you could make enough money probably to live, depending on your standard of living. If you wanted to be a day trader, which means you're taking more than four or five positions a day, most brokerages would require that you maintain a level of probably over $25,000 in your account. So you don't need a lot of money to trade at all, but you do need a lot of money to trade for a living. Now, I wouldn't guess that anybody's going to watch this novice level presentation and say, well, I think I'll just start trading for a living now. So I don't think that's going to be an issue, but that's something you should bear in mind. All right. Now, as far as market analysis is concerned, there's two basic schools to market analysis. I should probably ask, do we have any questions, Jeff?
Okay, now the audio is not being run so well. I had to figure out how to turn me on. The only question we really had is Chico on YouTube wanted to know if you have a call for USD/TRY.
No.
Okay, I thought that was what I figured your answer would be. Okay. Other than that, everybody says that the audio is well and they can hear you. But there's not a lot of questions. If you do have questions, please ask. We're happy to answer.
Absolutely. That's we're also starved for social interaction right now. Any questions really would be welcome. But when you do ask questions, bear in mind, again, this is more of a novice thing. And again, I can't tell you a specific position to take. I'm not licensed or even really capable to do so. All right, so there's two ways to look at market analysis. One is fundamental analysis. Fundamental analysis is basically when somebody looks at everything in the market or in the world, really. They look at environmentals, they look at the performance, or the earnings of the company, they look at the managers of the company, how healthy are they, have they been involved in any ill doings, and they're looking at all this to decide whether they want to invest in a particular firm. On the other side of that is technical analysis. Well, let's even back up for a second. Fundamental analysis would certainly take note of the current world situation when they're evaluating a firm. You couldn't really avoid it. Technical analysis says, well, I'm just going to look at the price and volume of a particular stock of a particular firm, and because whatever's going on the other side of the world or on the other side of the table is going to be represented by price and volume. So it all sort of distills down to that anyway. So they essentially more or less ignore environmentals and fundamentals and just stick with price and volume. Now, which of those is right? Well, I don't know. And I do know that we have a lot of partners who are very strict technical analysts. I know, by the way, on Saturday, we have an 8-hour long marathon webinar with a lot of great speakers. One of them is Oscar Carboni, and he's a huge, I believe the name of his presentation is Technical Analysis is King. He's a big proponent of just looking at the charts, and the charts are everything. So there are people like that, but there's also people that are kind of, more pragmatic, and they'll look at both sides of that. But just to kind of give you an understanding, when we talk about charts and what we do here at MetaStock is primarily technical analysis, because it really does involve charts, which are essentially price and volume. Okay, now we've kind of talked about these first three questions. What markets will you trade? That's a decision you sort of have to make and do your own research. What time frame will you be trading? Again, you're probably not going to be a day trader right off, but if you want to be an active trader, you're not going to do long-term, 10-year, 20-year positions, and you have enough money to trade successfully. Well, that sort of depends on you and your situation. The rest of this is really going to come down to how MetaStock can help you make these decisions as a charting tool and also with its power tools. And that's what I'm going to go over to, I think. Yeah, that's reminding me to go over to MetaStock. So now we're going to go into MetaStock. Well, we would, except it's not open. Let's open it. Jeff, do we have any questions?
We do. We have a Mile Stojak who wants to know, are you okay?
I think so. It was a little bit of a rocky start, I'm not going to lie. We had started the presentation today and realized we'd forgotten one whole segment of the presentation, or one whole audience. So we apologize to anybody on the GoToWebinar side that wasn't getting that. Jeff, how much do you have in your brokerage account? $5 million?
I think that's a secret.
Oh, okay.
That's in the paid webinar.
Okay. All right. Okay, so this is MetaStock. Now, when you open MetaStock, and again, I'm assuming you're a novice, you've never looked at MetaStock, you haven't really looked at a chart. I mean, you've seen charts, but you don't really necessarily know what you're looking at. So let's kind of discuss that right now. There's a lot going on here when you open the software. We're going to primarily focus on three things: charting, which is this tab right here; exploring, which allows you to explore the market to find the trades that you want to find based on your criteria; and system testing, which is basically back testing to test whatever system you're interested in against whatever securities you might be interested in. So let's start with the chart. I wanted to take a second to open actually the Dow Jones today, because I wanted to illustrate something that I think a lot of people aren't aware of. All right, this is a chart of the Dow Jones. Now, this is a scary chart of the Dow Jones. You probably couldn't help noticing. Well, let's back up even more. So if you've never read a chart, this is a standard bar chart. This is a very, very, very basic chart. There's nothing added to it. What this is on the right, on the y-axis, is the price of the security we're looking at. And in this case, it's the Dow Jones, and that's an average of a number of securities. That and the S&P 500 and the NASDAQ are what you'll see the news using as an index to tell you the health of our current stock market. When you look at a bar, let's go even a little closer. What this is saying is this is the price that the stock opened at during that period. And by the way, this is a one-day chart, so each of these bars represents one day. You can have a chart represent different things: 1 minute, 10 minutes, weekly, monthly, quarterly, yearly, but this is a daily chart, and we're going to keep it at a daily chart today for the purpose, again, of simplicity. Anyway, this is the opening price. This is the period's low, today's low. This is the period's high, today's high, and this is either the current price or the price when the period closed. And I think, is the market closed yet? No. So this is the current. This is the current price. Now, the reason I open this up is, one, to kind of tell you what a chart's doing, but also to let you know, yeah, that looks pretty scary. And I think people see that and they think, well, why in the world would I ever get involved in the stock market? Look how dangerous that is. And it's a good time to point out that, yes, this actually, to a lot of speculative traders, after trades, yes.
Greg, that looks a lot like the Dow, but it's not the Dow.
Oh, well, it does look like the Dow, doesn't it? What did I push?
In all fairness, all charts look like that today.
Yeah, well, you wouldn't know it, would you? Isn't it .dji? Did I not put the right
It is .dji.
Wonder how that happened. Yeah, there it is. Beg your pardon. Okay. Again, would you have known? Probably not. And everything I just said still counts. Anyway, the point I'm making is, if you look over time in the long history, and I just back way out, about 1900, and kind of put things in perspective, right? This little blip right here was the stock market crash in 1929, 29. Jeff? Yeah, 29. And that was devastating to the economy, and it flattened things out for a long time, and it took a long time to recover. But as of about 1960 or so, things did start to recover, and as you can see, ever since then, this is about 1980. This little blip here is the huge Black Monday we experienced in 1980 something. That was right when I was graduating from college. That was a huge deal, and to look at it now, it doesn't look like much of a deal. And I guess that's the point I'm trying to make, is in perspective, when you look over all the years, even though this right here does seem pretty bad, it's not as bad as you might be thinking. And I guess I'm just trying to take a moment to say, hey, let's look at this, the large picture. Yes, if your money's all in a 401k right now and you're about to retire, that's not looking so great. But if you're still in positions and you don't need to sell right now, it's unrealized loss. And the market can come back, and most likely will come back. So I just want to take a second to show that. All right, let's get out of that and let's open up. How about Apple today, Jeff? What's this? Apple's?
AAPL.O.
I know that.
Oh, I thought you were asking.
I was asking. I was just testing you. Okay, this is Apple. Now, again, you look at this chart. We've already determined that this is a price action, right? This is what the price has been doing since whatever, the July of this year. Now, there's a lot more you can get into a chart, but I just want you to look at this chart for a second and say, does this telling me anything? What is this chart telling me about what I need to know to make any decisions about whether Apple might be something I want to buy or not? Well, clearly, Apple is on a downturn right now, but is it going to come right back? Is it going to bounce back very soon, or is it just going to topple all the way down here? And looking at this chart, some people will look at patterns and they can kind of tell what's going on just by looking at the price, but more often than not, people are certainly going to add volume. And actually, before I even do that, let's go back to my presentation and talk a little bit about indicators. Okay, as I just pointed out, a chart, a plain old chart of Apple is not very elucidating. Is that a word? Not very illuminating. It doesn't give you a lot of information. So what a lot of technicians do is they like to employ what we call indicators. Now there's different kinds of indicators, and they fall into 4 basic categories: trend, momentum, volatility, and volume, as you can see on the top here. The trend indicators are the ones that identify strength and direction of a trend, as you would think. They include things like moving average, which is a basic statistic thing that we all probably learned in school, and the MACD. Those are 2 lagging indicators. When I say lagging or leading, as you can imagine, one is sort of behind the curve, one is sort of ahead of the curve of the action of that particular, the price of the action that that particular security is taking. These are just a few examples. There's dozens of examples of indicators. And today I think we're going to talk about MACD a little bit, but I encourage you to look up, if you're going to be going into trading, all of these indicators to kind of get an idea really of what they're doing and what they're showing you. Another type of indicator is momentum. That is telling you the speed of the price movement. So from period to period, how fast is that price moving? The basic ones you've probably heard of, or maybe not, are statistic oscillator, which is a leading indicator, and RSI, which is also a leading indicator. Another one is volatility. Volatility indicators tell you the rate of price movement, how volatile it is, if I can say. That includes Bollinger Bands. You've probably heard of John Bollinger. He's a good friend of MetaStock and turns out a very nice guy. And then average true range is another example of that. And finally, volume indicators show you the strength of the price based, or the trend based on volume. And volume, if that's not apparent, is price is the price of a security. Volume is how many units of that security has gone across the board or moved with every transaction, or with that day's transactions. Do you have any questions, Jeff? No, I mean, do you have any questions, Jeff? Are you following all this?
It looks really good. Yes.
Okay. All right. All right. So the great thing about MetaStock is every single indicator I just talked about is built right in, and that's what this little list right here is. And you can manually add a great deal of indicators to MetaStock if you want to. Or you can take advantage of templates we have where you can just add multiple indicators at one time. But right now I'll just kind of show you how this works. Let's say we want to add volume. We want to pull that down here. And volume is generally represented by a histogram. So here in the case of Apple, I am on Apple, right? Yeah. Here in the case of Apple, you can see that there's been a lot of volume, a lot of trading going on recently, a lot of selling, of course, in this case. Another thing you might be interested in looking at that we mentioned just a second ago is moving average. In this case, we'll just say 20-period moving average. And excuse me if I'm telling you something you know. Moving average, basically, it's taking the last 20 periods, in this case the last 20 days, and previous to this, like this point right here is the average of the last 20 days previous to that point. Okay, and technical analysts employ a lot of moving averages, And there's a lot of, this is just a very simple one, but it kind of gives you an idea, right? Because this moving average is going down, if it weren't apparent enough by the price, you would know that this trend is going down. All right, another thing we talked about a second ago is the MACD. And let me code, and typically you wouldn't put the MACD right down on the chart, you'd put it up above. Okay, now what the MACD is doing, it's taking the difference between two averages, the 24 and the 12, and then judging that against the 9-period moving average. Now, if that's a lot, you don't want to remember that, you really don't have to, but if you did want to know more about what that is, one of the great things about MetaStock is you have this little question mark here, and you can click on the thing in question, and it'll tell you. So right here it says the moving average convergence divergence, the MACD, is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average, and then this dotted period here is a 9-period moving average. And what this does, the MACD does generally, I'm going to add here, show this in another spot, is tell you by the crossover of those two lines whether there's a buy or a sell opportunity. It also tells you if a particular security is overbought or oversold. So let's look at this. Right here you can see there's a crossover, and in this case the MACD was saying that would be a good time to sell, and it turns out the MACD in this case was correct, because as you can see, if you had sold that at that time, you have avoided a lot of this loss. Back here you can see it was crossing over the other way, and this time the MACD is saying, hey, this would be a good time to buy, and you can see that had you bought in this case, that could have worked out pretty well for you. So right now you can see what indicators are doing. They're giving you more information, because at a glance at just the price would not have given you that information. So these indicators really become very useful. Now, to make them one more step useful, and I'll be honest, just about everything I've shown you up to this point is pretty much available on any chart you'd get anywhere, from your broker or anywhere. Where MetaStock starts to shine is from this point forward. And one of the things we really do well is get out of that, and what we call the expert advisor. Now, the expert advisor gives you even more information and makes it easier at a glance to judge what's going on with the chart in a particular system. So let me go ahead and go to MACD. Any questions out there, Jeff?
We do. We have Mr. Godfrey wants to know, what is the most reliable indicator?
I can tell you that I can't tell you that. What I can tell you, probably one of the most popular indicators are the MACD, the RSI, Bollinger Bands, and some of the things we've already talked about. Do you have a comment for what the most reliable indicator is, Jeff?
Well, maybe it would be good if we could go in and maybe, like, hypothetically test them.
What?
Yeah, like see which one works best, like over the last year or two.
I don't know. Okay. That's a very good question. Now, I can't tell you. I guess there are people who would presume to tell you what the most reliable indicator is, and I suppose there may be even tests that have been done. But it sort of really depends on what you're trading and how you're trading and when you're trading is how reliable an indicator is going to be. And what Jeff was just alluding to is backtesting, which we'll talk about in just a moment. Thank you very much for the question. Okay, so now that we've put on the Sturby dude called the expert advisor, now we're getting very clear buy and sell signals, as well as a ribbon down here that shows us when, according to the MACD indicator, things are bullish and bearish. As well, you can see when things are overbought or oversold. It'll either be indicated by these colored bars, in this case, oversold. So now we're getting even more information. And if you even want to get down deeper, you can do a commentary. Why am I? Oh, because I got this guy clicked on. Sorry. Get out of there. All right, so if you right-click on here and say Expert Advisor, attach commentary, now you can see this little caret here. This little caret is telling you what's going on that particular day, and I'm going to put it right here where there was a sell signal previously, and it explains to exactly what's going on. Currently, the MACD is bearish since it is trading beyond its signal line. The MACD crossed below its signal line 0 periods ago, because that's when it happened. Since the MACD crossed its moving average, Apple Inc.'s price has been unchanged and has ranged from a high of 323 to 317. So that just gives you a very specific explanation of what's going on at that very specific time. Now, as the gentleman who I don't recall his name just asked the question, what is the most reliable indicator? Well, let's even ask better than that. How reliable is this indicator on this security? Now, if you look at things, you can kind of see that's a fairly reliable sell signal right there. This is a fairly good buy signal right here. This one, not so great, just kind of went sideways. This one, pretty good. This one sort of went sideways. So you can kind of look at that over time and say, well, yeah, it seems to be making it about, maybe 10% or 20%. You might guesstimate it in your head or just glance at it, but there's really a better way to know how a particular security does with a particular indicator. And I should have pointed out, if I didn't, that, again, they're all based on different things and the different things you're looking for, and they're all going to be different with different securities. That's why what I'm about to talk about, which is called backtesting, becomes very important. Jeff, explain backtesting.
Okay, sure. Let me give this a bit of a shot. So the idea here is, and with most technical indicators, the idea is let's measure the market. And the thing I love about technical analysis is the fact that it's objective and not subjective. In other words, like the signals that you're looking at, the buy and the sell signals are based on things that are rooted in fact, right? So the reason I like system testing is everybody can kind of look at the same chart and they get the same answer. We're not trying to guess what the next $1 trillion in stimulus is going to do. What backtesting allows us to do is say, okay, well, if we had followed every time the MACD had given us a buy signal over the course of the last year or 5 years or 10 years or however many years you want to go back, a lot of the Reuters or a lot of the Refinitiv data goes back to the 80s. How much am I going to make or lose? How well does that indicator work? How reliable is it, right? But since there's several hundred of different indicators that are available, it allows you to test all of them at the same time and get a good idea of how well it works.
Okay.
How'd I do?
That was a little long-winded, if I'm honest. I didn't expect you to take that long. I was just going to say that you're essentially, and he said it in many more words than I expected.
I thought you wanted me to do your job.
No, you did fantastic. That was great. Good job. Backtesting is basically, you're saying, in this particular example, for instance, we're saying, hey, if I had used the MACD as an indicator to tell me when to buy or sell Apple over a certain period of time, how well would that have worked? So it's just stats. And as Jeff mentioned, it's getting through all the clutter. It's just saying, how does this indicator work historically on this security? Is it perfect? It's not. But it does give you a pretty good idea of how things work over time. And that's what we're going to talk about right now, which is the system tester. Now, the system tester, and I just realized too, I blew right by a couple of things when I was showing you charting. Whenever you click on any of these modules in MetaStock, when you click on charting, it's going to show you all the securities available to you here on the left. In this particular instance, there's 39,641. This sort of depends on what data package you're using and subscribing to. Also, what's going to be listed here is based on a lot of customizable features of MetaStock. So this is all the stuff available to you, but it may not be showing here because this is a demo computer and whoever does their demo puts on here what they like, but you can have more or less what you want there, so it doesn't have to look like this. Now when you go to another module, exploration or system testing, it's going to split that into two. It's going to show you all the systems that are available to you, and again, this will depend on if you have any add-ons in MetaStock. MetaStock comes right out of the box with a whole bunch of indicators, but you can do more, and you can also do custom indicators, which means you can write your own indicators or embellish on existing indicators. And we actually have a service where we can help you with that if that's something you're interested in. But today we're just trying to keep it simple. So for the sake of keeping it simple, we're going to do the MACD system test and just do it on Apple, which turns out is right. Let's click on this to make sure I don't have anything else selected on Apple. Now, when you're doing system tests, MetaStock gives you some options because you obviously want to make this system test sort of realistic, sort of real to life. And you've got these various tabs here to do that. The first tab I'm sort of going to fly by. It's just telling you what the resulting chart's going to have plotted on it. And I don't think we need to talk about that today. The next one is your account. Now, remember we talked about how much do you need in your account. Let's say today you have $10,000 in your account and you're willing at any step along the way to risk 20% of that account. So you're saying, okay, whenever we take a trade, I want you to take that trade with 20% of whatever the equity is in my account at that time. And as far as your brokerage is concerned, this used to be a little more involved. If you're trading a margin, which we won't talk about today, this is where you'd set it up. Also, if you have you're probably getting interest on a brokerage account, minimum as it might be, so you'd set that here. And until recently, getting in and out of trade cost money. You may or may not know that most brokerages now offer essentially free trading. And I mean really free trading. There's no cost if you just use their basic trades. You open the account, you take a trade, and you sell, you buy and sell, and there's no cost. That could be a good thing or a bad thing, I guess. Maybe bad because you might not think about your trades as much as you would otherwise, but at any rate, it used to be $4 to $8, now it's $0, so you can just pass that right by. And then there's trade execution. I like to keep it on realistic market prices, and what this means is, remember, when you are getting in and out of a trade, it's based on whatever criteria you set. In this case, we're just going to say realistic market prices, which basically is MetaStock saying we're going to get in and out of the trade based on when the MACD said to get into that trade. You can make it so, okay, I want to get out at the opening of the next day or something like that. We're just going to keep it on realistic trading. And slippage we're going to ignore, and we're going to hit OK. Jeff, did you have a question? Okay. So at that point, you've worked out our criteria, and now we're going to go ahead and just start the system test. In this case, it'll take just a second because it's one security and one system test. As Jeff pointed out, you could have tested 20. You could have tested all of these securities against, or all these systems against that one security to see which one would have worked best. But today we're just doing one-to-one, again, keeping it simple. And this is a report of that. Now there's a lot going on in this report, and I'll tell you at the end of the class today where you can go to find out more about all these power tools that we're just sort of breezing right by today. But a couple key things you want to look at in this report. Again, so we started trading 1,250 periods ago, about 5 years, so 2015 to now. You would have profited $2,048 using, I don't remember, Jeff, did I do long trades only? I did. I should mention here, you can do long or short or both. Today we're just talking about long, which means you're selling, you're buying and getting out. You're not borrowing against and getting in. Basically, you're buying low and selling high. That's your goal when you're going long. And that's what we did on this test. We bought when the MACD said to get into a trade and out when it said to get out. All right, so in this case, we made $2,000 over that period. If we had bought and hold, meaning we just bought 20% and left it there, we'd only have received $17,000. So that gives you a good idea of how you could have done one to the other. A couple other things it tells you, there were 38 trades. Your best long trade, well, there was no shorts because we didn't do shorts. The best long trade was $305. Your risk reward ratio was 89, which is not terrible. Again, I don't want to get into all this. Clearly the things you're really going to want to know are how many trades would I had to have made and how much money could I have made. Now there's other things you can look on this report. You can look at your individual orders. I don't honestly know why people would want to do that. You can look at your positions and what percentage of your equity is in a position. But here is the thing that most people are really pretty interested in, and that is the equity curve. How are we doing on time, Jeff?
You have 18 minutes.
Okay. Since I started late, do I get those 3 minutes back?
You can. I'm here till. I'm here as long as you want to be.
All right. This might be a good time to point out that right after this presentation, in 1 hour after this presentation, we're going to have Anne-Marie Bain, right?
That's right. Mm-hmm. And she's going to talk about how to discover market bottoms. I'm quite interested in it.
I'm quite interested as well. It'll probably be slightly more advanced in this presentation. I don't know. And at that presentation, Jeff will be sitting here and I'll be sitting over there. And things will clearly go much smoother. So here's an equity curve. And this is basically saying, okay, I started with $10,000. And over time, there's some drawbacks or drawdowns. But they basically, here maybe got a little scared. But basically, I continued making money over that period of time. And that's important. So what we're seeing here is basically the MACD, if you had $10,000 and were willing to risk 20% of your equity at any given time, was not a bad way to go. All right? So let's get out of this. So let's just say for the sake of illustration that we decided the MACD is a good indicator to use with Apple, which is fine. And maybe you want to trade Apple, but the thing is today there is no MACD crossover for Apple. This is a live chart. So the MACD is not crossing over. The last was a sell signal and there's no buy opportunity. So this isn't going to work for you and you're interested in trading today. Now, you might be thinking, well, there's not going to be anything to buy today. And then you'd probably be wrong. And let's talk about that right now. Another great feature of MetaStock and technical analysis generally, but MetaStock specifically, that people love is the Explorer. And that's basically your ability to scan the market based on your criteria. I've had a chance in the 13 years working here to meet a lot of our partners who are expert traders, and almost invariably when I ask them what part of MetaStock do you really like the best, they say the Explorer. Let me go to there right now. So the Explorer basically, as I mentioned, says, all right, I know I'm interested in whatever system, and right now we're talking about the MACD, so let's go ahead and go up here and select MACD. I think it's already selected because I did this earlier. MACD, there it is, MACD buy signal. So I'm interested in scanning for the MACD, and I want to do it on a particular list of securities. Now, you could go crazy. You could say, I want to scan the entire list of 39,641 securities in this list. You're probably not going to do that because you probably don't even have the ability to purchase those, or you're not interested in those other exchanges. So let's make it something a little more reasonable, and let's go ahead and scan it on the Dow, the NASDAQ, and the S&P 500. Another thing I can point out is, to keep it simple, today I'm just going to do one security with one system with multiple securities, but you could do multiple systems on multiple securities. A very simple example of that would be, hey, you don't have a lot in your brokerage account. If it's $1,000, you're not looking for $200, $300, $400 securities. So you could set a price volume filter in your scan that would just knock those out of the way and get them out of the way and just scan for the things that you can afford or that what you're interested in. Right now, I'm just going to keep it easy and explore the MACD. Jeff, while we're waiting for that to explore, are there any questions?
No, we don't have a lot of questions.
It's because I'm doing such a great job of explaining everything in the first place.
Awesome. Yes, I'm sure that's it. You're doing a good job.
Oh, thanks, Jeff. Jeff is one of our best two speakers, to be sure. And we're saying that mostly because the competition is both of our boss.
Should we remind people to like and subscribe?
Hey, that would be great. Don't forget to like and subscribe.
It helps quite a bit.
Yeah, absolutely. Okay, so now we've gone through the entire market and we've come up with these results. And what this is basically saying is these 1, 2, 3, 4, 5, 6 securities have tested. Hey there, you okay over there, big guy? Have tested positive. Tested positive. They've tested as they are hitting a MACD buy signal today. Now we could open up each of these and look at them individually to see if there's something we're interested in. But remember, we have the ability to system test on multiple securities. So a really simple thing that I like to do with MetaStock is get out of here, out of the Explorer, and go back to the system tester, which has already selected MACD conveniently. And then you can go unselect this because you don't want to do that again. Then you go to the very bottom, and it shows the securities that were in your last exploration. And so you can go ahead and do a system test on those. And since there's just a few, it'll take just a second. There it is. You click View Results, and now we have a little more demonstrative list of securities. Now, what this report is a little different than the last report we did because we had multiple securities, right? So it's telling us before we even dig in how those things did before we even dig in, and you can go ahead and rate them by net profit. And the most profitable of the 6 that came up with a hit today for a MACD crossover for a buy signal is, how do you say that? Xilinx Inc. Let's have a closer look at Xilinx Inc. Okay, so now we can view the report that we were looking at earlier, which is looking right at a specific security. If Xilinx Inc., again, testing the same way we did a minute ago with over 5 years, would have given us $2,000 rather than $1,500. If there was a buy and hold, you would have been in this many trades. And so that gives you some idea how that would have done. So I think you can see where we're going here now. If I open this chart, first of all, if I open this chart, what MetaStock does is it puts the information from your test. It shows you where all the buys and why is this being so slow all of a sudden? Did I get a window open somewhere else? No. So I'm going to clear all that out because I'm not interested in that right now. What I'm going to do is apply a template. And I probably should have told this before, but anytime you apply indicators to your chart, you can make that a template so you don't have to apply them individually every time. And a lot of our systems come with templates, and I've made a template earlier called Greg's MACD, so you can see a chart which has the MACD, which is what we were interested in before. So now, what we have here is a security whose name I cannot pronounce, XLNX. They have a buy opportunity today. They have shown to be somewhat successful historically when we backtested on the MACD, and we've gone from here's a chart that I don't really know much about in a world of securities that I don't very much about, and a very distinct buy opportunity. This is probably a good time for me to remind you I'm not suggesting you buy this security. I'm just trying to, for illustration purposes, tell you what MetaStock can do. Are there any questions? Jeff?
We have no questions.
Okay. There is one more power tool since we have a little bit of time. Should I show them the forecaster?
Sure, if you'd like to.
All right, so we've been through processes. Remember we were asking questions how to get into a trade. Well, we just showed that. How to get out of it. Oh, we didn't answer that. So getting out of a trade, let's say we get in this trade today. Using the MACD, we would know to get out of the trade when the MACD crossed over again. But you might want to take the extra precaution of putting in a stop on your trade or a trailing stop. And basically what that is, and again, if I don't explain it good enough here today, you can look it up. But when you get into a position with your brokerage, you can say, I want, if this goes below this price, to get out of this trade automatically. So you don't have to hover over your computer, especially if you're a real-time trader, to get out of that trade. So you can say, okay, if I buy it at $1, I want it to get out if it goes lower than 80 cents. So I'm protecting myself. Or you can put in what's called a trailing stop, where you're saying a certain percentage, you're going to follow that, and if it dips below that, then you're going to get out of the trade. That's how you protect yourself, but also most systems, many systems, give you both an entry point and an exit point built into the system. This is also probably a good time to mention that that's one of the great things about technical analysis, is it doesn't have to be on your thoughts about the trade or your thoughts about the market or your fears or your greed. It's just a systematic, robotic way to make trading decisions. And the best traders find a system that works for them, and they're dedicated to that system, and they don't vary from that system. All right, so now at this point you're saying, okay, you've told me that this is got a buy signal on the MACD. You've told me that traditionally this security has worked well with the MACD. There's still no guarantees. There never is a guarantee, by the way. But is there any way using MetaStock I can be a little more confident what's going on with this trade? And there is, and we'll talk about it now. And this is a bonus, because I wasn't going to talk about this today. But let's go ahead and give it a try. Now, the forecaster is a patented part of MetaStock that no one else has. I can guarantee that, because it's patented. And what you're seeing here is the same chart we were just looking at, right? It's the same price chart, but these little yellow golden triangles are not buy or sell indicators. They're basically telling you where this action down here has occurred. And this action, in this case, is a MACD cross-up. So it just told you a cross-up just occurred here. This is a lot to take in, and I don't have a lot of time to talk about it. But essentially what you need to understand is this is stats. We're saying right down here, I'll just read the first line to you. This event occurs 6 times between March 26, 2018 and Thursday 19th, 2020. Then it goes on to tell you how many times it happened, what the resulting gaps were, and all that. Now, all this statistical information is represented in this cloud chart. What, cloud chart? Yeah. Am I saying it right? Cloud chart. Yeah. So
Forecast cloud.
Forecast cloud. Thank you. So, and if I click actually on here, it shows it even larger. Now, what this is saying is, okay, from this period, historically, like if this is period, now, sorry, I have a hard time explaining this. The lighter, the brighter colors are the higher, not probability, but the higher times the more times that has happened historically, and the lighter, the bluer colors, the darker colors, show there's less times that's happened historically. So historically, much of the time, after one period, after one day, I would say 10% of the time, that price has gone up between 1 to 7 periods which in this case is 1 to 7 days. Now, when you're a stock trader, that's good news because you want to know if it's generally going to go up or down. But this sort of exact timing becomes more important when you're an options trader where, again, we didn't get into options today, but you have to know on a particular date to make a decision about where that you think that price is going to be. Because a stock you can write out, right? You can say, oh, I'm going to buy the stock here and it goes down. Oh, I'll just hold on to it and I'll just write it out. An option, you won't necessarily have that choice. So this is where something, this is where MetaStock has tools that really help you out with that sort of timing. Jeff, did I miss anything on that? I think I'm going to.
Did that make sense to you? Really good 1,000-foot view.
Okay, and that's what we're trying to do, 1,000 feet. All right, now, you might be asking yourself, hey, this MetaStock sounds like a great thing. How can I get myself some MetaStock? And I'll tell you right now. We are currently doing this. If you navigate to metastock.com/P220, metastock.com/P220, first of all, you see, look, there's Jeff right there. You can see some videos that kind of highlight some of the things we sort of quickly ran over today. The Explorer, remember the scanner, the Expert Advisor. Kelly, the president of the company, can tell you about the system tester. Hunter can tell you in much more detail and probably better the forecaster. Then the new things we didn't really even talk about today, which was Quote Center and Option Scope. Option Scope is a great tool for options trader if that's something you're interested in. Additionally, if you get MetaStock now, you can become privy to some special training by Lynn Dufresne, who has been our lead tech guy at MetaStock for what, 8,000 years, 23 years?
I think it's over 20.
Yeah,
I think
yeah.
It's 20. He was hired right about the same time I was.
I want to say 23 years. So he's already had one training session he did on February 25th, which is recorded, and you'll have access to that. He's doing two more, one on March 26th and one on April 16th. And basically, he's just going to sit and answer any question you have in a live event, just in this same room. And he does a really, really, really good job. And he doesn't often do this. In fact, he's never done it. This is the first time we've ever employed him to do public training. And the deal is, you can get, I should mention that MetaStock actually comes in two essential flavors. One is real-time, that is MetaStock RT. That is something a day trader would use, and it would employ real-time data. And what real-time data is up to the second or sometimes up to the tick data. So you know what's happening right away, assuming you're paying your exchanges, and it's something a real-time trader would employ. I'm assuming if you're watching this particular webinar, you're probably not interested in day trading. So we're going to talk about MetaStock daily charts, which gives daily data and daily updates, and is not nearly so expensive, but still premium market data, and it will probably work out great for anybody that's interested in MetaStock and just now getting into trading. What will allow you to do now is get MetaStock for 3 months with data for the price of one, which, let's click on that and see it. I have to go through the whole program process. Okay. What is the price of that going to be, Jeff? 1 month or?
For North America, it's going to be $69 per month.
Okay.
So for the cost of $69 per month divided by 3, you can try the software that's been rated how many times in a row, Mr. Lewis?
26, 27, according to Technical Analysis of Stocks and Commodities magazine. They have consistently said MetaStock is the #1 amongst the voters who are the readers. The MetaStock specific we're talking about here, MetaStock DC, for I'm going to say 27 years in a row, never lost. So that's great. So you get 3 months for the price of one. Now you can either go to the website we talked about here, metastock.com/P220, or you can call us at, I really wish the telephone number was right here, and it should be on here, but it's not. What's the number, Jeff?
800-882-3040.
800-882-3040. Now, before I go, are there any questions? Last questions?
There are not.
Okay, well, thank you so much for joining us today, and we again apologize for the little glitch we had at the beginning of the presentation. A couple things I'd like to mention. Again, in just an hour from now, you can just stick around on YouTube and hang out. In an hour from now, Anne-Marie Bain is going to come on and talk about how to know when to recognize the market has sort of bottomed out, as we're all kind of wondering when that's going to happen. Then on tomorrow, we have a market recap, although I don't know if we have that the presenter tied down. Every Friday at 2:30 Mountain Time, 4:30 Eastern, we have a market recap, which we invited a guest speaker to come in and just discuss the last week's market and how you might navigate going forward. And then this Saturday we have our very special monthly event, which is the Trader Summit, which has 8 speakers, and it's 8 hours long, and that's always a great hit. And I'm sure this Saturday a lot of them will have a lot to say about this current market, which I'm sure a lot of us would like to know about. So thank you so very much for your time today, and successful trading. Jeff, hit number 3.